Hi there, guys, and welcome to this week's episode of Midweek with Indiacharts. This is Muskan Kapoor, your host, and I'm joined here with Jay Vora. We will not blabber a lot, and we will just get into the questions. So I'm just going to ask you about how the news situation has been lately. Is there any news that you have picked from the week that has an impact, whether it's a global news or a domestic news? But has it impacted if there has been any?
So the good news is that the past gone by week hasn't been eventful, so that is good. Because the things are settling down, it seems. So there was one development which I read, which was that SVB Bank is now merged with
Yeah.
First Citizen Bank or something like that. Okay, so that is actually positive because the pace
Mm.
with which the Fed has managed to handle this situation was commendable. Because quick actions were taken and there weren't cascading impacts on the system. I mean, that is what it is looking like so far. In fact, the Fed has also provided liquidity as well, and kind of it has even expanded its balance sheet because of the line of credit which they have given to banks. So, over there, it seems like the situation is, I mean, cooling off, and it is, it is not getting worse basically. And even the stability which wasn't there, for a few weeks, so now that seems to be coming back. So that in general is good for the US bank, and
Correct.
that in turn is good for market.
Mm.
Apart from that, domestically there has been some tweaking in the taxation. So firstly, from the mutual fund perspective, I think the debt funds which were there, which used to be taxed, based on the indexation benefit and all, so that has been gone away. So now there is no incentive as such to invest in debt funds, because the returns will be very much equal to the FD rate. So just to give you a context, if a 7% interest rate is there, okay, and you fall into 30% tax bracket, so your
Correct.
2.1% is gone.
Mm.
So your return is somewhere around 4.9%. And similarly, if in a debt fund, if you're investing, and say the debt fund gives you 8% or so, okay, but
Mm.
with the indexation benefit and the long term capital tax applied,
Yeah.
I mean, some 0.4 to 0.5% used to get
Mm.
deducted from the overall return. So then,
Correct.
it used to boil down to 7.4 to 7.5% approx was the return. So, there was a
Correct.
huge incentive to invest in the debt funds earlier.
Mm.
Now that is gone. Okay, so now that is actually good for the banks, because people will then tend to put their money more into FDs. Okay,
Yeah.
so which will lead to a good CASA for banks,
Mm.
and that can also be a good liquidity provider for banks as well, wherein they don't have to go and borrow from the money market. Instead, they
Correct.
can raise their own deposits, and that will actually be good for
Mm.
banks, but it is negative for AMCs. So this was one development, and the other one was on STT, wherein the
Mm.
government has hiked the STT. So I think in 2014, I mean in 2015 or 16, it was hiked, and now
Correct.
it is again hiked. So from
Mm.
0.05%, it has now been hiked to 0.062. Okay, so that is, I think, an increase of 20-25% or so.
Mm.
But actually, if you see it in rupee terms, it is not much of a hike. But yes, it will definitely impact a bit, but not too much. Okay, so I think there was a correction on Friday's trading session, if I'm not wrong. Yes.
Mm.
So after the announcement, on the next day of the announcement, there was some correction, and people were alluding it to the STT high, but I
Got it.
don't really think that is the case. It is just that in general there was some weakness in the market,
Mm.
and that coincided with that news. But apart from that, the good news is that there is no bad news, which we were seeing in the past couple of weeks.
Correct. Makes sense. I will move on to the next question quickly. I wanted to ask about the FII's positioning in the index futures. And has it reduced from the last week? What can be the implication on the indices particularly?
Right. So I'm very excited to show this firstly on our analytical platform which we are building. So all this
Correct.
while I was showing you on my software, but I'll be showing this in the analytical tools. So let me share my
Perfect.
screen.
Hmm.
Yeah. So here, I mean, as you can see in my screen, this is the FII net future position. Okay, which means that, and this one is actually is in a percentage term. So I'll come to the absolute figure as well. But first, let me show you the percentage term. So you can see over here that whenever the FI short positioning, okay, it used to come to this 20 mark, okay, which is basically 20%. So that is where, eventually the Nifty saw some rally, okay, at least for few weeks and few months, it saw that rally. You can see over here as well. And in fact, after COVID, it actually bottomed out and it rallied. Okay, again over here, if you see, it was this low. Then again over here, if you see, it was this low. Okay. So at least, there were been few weeks of up move, or in fact, even few months of up move, after seeing this oversold condition. So this is what we are seeing it right now as well. So the expectation is that, there could be a good bounce in the near term. Now, whether that is just a bounce and we eventually correct more, so that is something we will figure out when the bounce will, eventually play out. Because if it is a corrective bounce, okay, which many of the people who don't follow elite wave might not know, but let me tell you that if this bounce is something like this, okay, wherein highs and lows are overlapping and the entire structure is actually corrective, okay, then it could be just a counter trend move. But yes, I mean, if it is a bottom, okay, and we actually see a clean impulse 5 wave rise, so that is when we would tell with some degree of confidence that the bottom is done. Now frankly, if you ask me, whether the bottom is done or is it just a counter trend pullback, I don't know. But when I look at all of these sentiment data, okay, that
Correct.
is actually very extreme. And if you see in terms of events, okay, so we had this banking crisis, then we had the Adani crisis, and despite of all of that, if you see that the index has corrected just by 10% or so, okay, so that tells you that the index on the whole is strong. Okay, so there have been some crashes in the mid and the small cap index, which we'll talk later. But if you purely go by the action, I mean the price action, then it does suggest that there is a good amount of strength and resilience that is being shown by the Nifty index. Now, this was, I showed you the percentage term, right? Which I mean, it is showing that we are already in oversold zones. Okay,
Correct.
so over here, ideally the positioning should start in the favor of longs, so wherein they would start cutting their position, and you can see a good short covering rally in the days to come. So that is what the expectation is. Now I'll try to validate that through other parameters as well. So this I showed you was percentage term, right?
Correct.
Now let me show you FI net index futures position. So this is not in percentage term, but this is in absolute term. Okay. So over here, you can see that when we look at the past data, so especially after 2017, okay, that is where, the P notes were banned. So over here, if you see, there was one good range that was followed by the market. Okay. So whenever the FI's positioning used to come around 1,30,000 or so, that is where we used to see a bounce. Whereas on the upside, around 90,000 to 1 lakh position, whenever it used to reach over there, we ultimately used to see a correction. Okay, that has been the case so far. But it is only this time around that the FI short positioning has increased, and it has gone all the way to 1,96,000 or so. Okay, and from there we have seen some short covering. Okay, but it hasn't been a massive short covering yet. Okay, but each time you see that whenever there has been an oversold zone, okay, it is accompanied by a good rally in the markets. Okay, you see it over here, you see it over here, okay, which is over here, again over here. So you can see that each time whenever this bottom was made, okay, that coincided with FI short positioning. And once the FIs covered their short, so we used to get a short covering rally. So will this be different this time? I don't know. But I think that if we have to go by the data, then the data is telling you that there could be a good short covering rally that should be followed.
Correct.
Now I'll show you one more interesting thing, which I think nobody follows very closely. I just noticed it when I was loading the data. So we could see that DIIs are now actually playing a good role, okay, in dictating the market moves. So even in 2007, 2018 or so, if you see, whenever the DII positioning was at the peak, okay, that is where the market used to bottom.
Correct.
Okay, you could see something over here as well. So over here, you know, when the bottom was there, I mean, the positioning was not that great. Okay, but if you see at this low, I mean, the long positioning has been, has surpassed the previous peaks as well. Okay, so that kind of tells you that you know, the DIs are kind of fallen over here. Okay, so this is one significant data point which I noticed is you know, again favoring for a up move in the near term to medium term as well. Because actually, if you see over here as well, you know, we have seen a good pullback whenever the top has been made. Okay, so this is another factor which tells us that you know, you could see some up move in the near term and maybe a bottom as well. Now, one more interesting thing, you know, which we had actually figured out when we were looking at the data was this, we had mentioned earlier as well. So this is client plus FII positioning. Okay, so this had hit a peak only thrice. Okay, I mean the overbought reading. So over here it fell just short of this overbought reading. But you can see over here that, see, whenever there was a high reading, you know, we had seen a pause, right?
Correct.
You can see over here we had seen a pause. So at this point of time as well, you know, while we were telling people to stay cautious, this data was one of a significant contributor, because all other data were actually telling you that the up move is likely to continue because the Nifty was making higher high. But this data was telling us to beware, okay, because it is coming to an level where in the history the Nifty has taken a pause. Okay, so the similar thing has happened this time around as well. Now, when you see the bottom, okay, let me, so when you see over here in 2016, okay, when it, when this FI plus, client plus FI net index positioning, okay. So whenever this had come towards the low of, say, somewhere around 50,000, you know, markets have actually bottomed out. Okay. Now this is the, this time again, it is coming towards that level. So this data is another one, you know, which supports for an up move. So actually, the point I'm trying to make is that, see, these are all data. Okay, over here we cannot put in our bias, right? These data itself are an indication that somewhere the market could be bottoming out. Okay, and this is not something that I'm trying to derive or something, but this is what the history is telling us. No, that is basically the FI net long position percentage, then FI positioning, then DI long positioning, then client plus FI net, net positioning. So all this is telling us that maybe the Nifty index is at an inflection point, and you should, you know, see a bottom in the near term. And apart from that, we have actually discussed the setup for the Nifty index as well. So wherein, you know, broadly, this is the channel which the Nifty index has been following. Okay. And finally, today, if we see, there has been a good breakout from the consolidation. So basically, if you zoom in and see, then almost for three trading session, okay, the Nifty was trading in a range. Okay. And this range is being broken out in today's trading session.
Yeah.
So in the very near term, my guess is that the Nifty index should rise higher towards the 20-day average. And once that is surpassed, the 40-day exponential average will be tested. Now, what gives me a conviction is that the daily RMI is in a bullish mode. Okay. So typically it should ideally inch higher and it should go up. I mean, we can see an up move and it can complete the cycle. So yes, this was one of the key factors. In fact, while we were highlighting to our subscribers as well in the past few trading sessions, so there was, kind of frustration that was building in among the people because market was not doing anything. Okay, it used to go up and it used to come down, and basically nothing was happening. But this indicator kept on telling us to have patience. Okay, and eventually the breakout should occur, and that is what has finally occurred. And along with that, as I mentioned earlier, that the FIIs positioning and basically the positioning in the futures and options, over there. So that is again giving us that indication that maybe a bottom could be in place.
Correct. Makes sense. We're going to look forward to it. While we were talking about the Nifty index, it clearly aligns with my next question. I want to know why the Nifty mid cap and the small cap index, they saw a significant correction while Nifty was just consolidating, as you said. Do you think there's a panic bottom that could be in place? Is there more to go? What is happening?
Yes. So Nifty small cap is the setup is very interesting because if you see, it has tested the 61.8% retracement mark today. Okay. And it has tried to bounce back. So over here, what has happened is that this entire range, which it was holding, okay, now that has been broken. Now, the key thing I think to watch out for is whether the Nifty small cap index, whether it manages to break this averages or no. Okay, because if supposingly it is in a downtrend, okay, which this breakdown is telling you, then ideally this averages will not be taken out. Okay, and it will just be a retest of the resistance, and then it will continue to grind lower. So that is something that needs to be watched. But at this point of time, if you ask me from an elite way perspective, this was one clean move, okay, of which we have got a retracement over here, and now ideally it should make a move higher. Okay, and this might just be a panic bottom according to me. Okay, the confirmation of that would be a close above this averages. Okay, the close above the average and the close above this resistance line, which is right now, the resistance line is right now around 9,050, and the averages is right now around 9120 and 9210. Okay, 9209 basically. That is the 40-day exponential average. And mind you, these are all dynamic now values. So each passing day, the value will keep changing. So that needs to be monitored. But yes, I think there is a good chance of a panic bottom being made. But again, let's see how the Nifty small cap index behaves. If you see the Nifty mid cap index, again over here, this trend line was broken in yesterday's trading session. Okay, and that actually created panic among the people because the portfolios were bleeding, and what was happening was that the Nifty index was just consolidating. Okay, so it was just moving something like this on an hourly chart, but the Nifty mid cap index kept on declining. Okay, so that had caused fear amongst the people, and you can see over here that the trend line breakdown occurred, but today there was a very good comeback by the Nifty mid cap index. So that is also telling you that maybe a panic bottom could be in place. Okay. Now, again, similar to the Nifty mid and the small cap, Nifty small cap index, these averages are key. So let me tell you the values of these averages. So the 20-day average is at 30,171 and the 40-day exponential is at 30,315. Okay, now these two levels again are dynamic and that needs to be monitored day to day. But I think once this averages are taken out on the upside, you can see a good move, that can follow. And again, one thing that we would be watching out for the Nifty mid and the small cap index would be the RMI indicator, that needs to see a turnaround and it needs to see a bullish crossover. That is where the conviction will increase even more.
Correct. Makes sense. We have to look at a lot of levels right now before making choices. And yes, you were correct about causing panic yesterday because portfolios were bleeding. And yeah, we just have to look at it and hope there's haryali everywhere sooner or later. But yeah,
Yes.
thank you
Hopefully,
so much.
if we go
Mhm.
by all this data, then
Yes,
yes, we should see a good up move in the days to come.
correct. Makes sense. Thank you so much for the session. We will see everybody next week. Thank you.